All right, hello, my fellow investor, City Intelligent Investor here, and in today's video, we will be talking about AMC and GME. So just so you know, this video is sponsored by Acorns, so use the link in the description down below to sign up. If you use that link, then you will be entered to win a free stock, which is Procter and Gamble. The giveaway will be happening next weekend, so sign up, guys. Use the link, and trust me, you will not regret signing up for Acorns. So starting off with the video, now the update that I got from AMC and GME, I feel that is pretty good information. A lot of people don't see this information and don't pay attention. So I'm going to be explaining a little bit. And what I've been told is that GameStop and AMC will not be shorted as much anymore because they've been losing in this. So at the end, we are winning. In this situation, like I said, always invest what you're willing to lose. So if you're in these stocks and you've lost a lot of money, if you guys need to jump out because of financial issues, then go for it. But if you guys want to hold, then feel free to hold. I'm holding till the end. So, yeah, at least we're winning. And the way we're winning is that these hedge funds are actually paying a lot of interest and they're still losing a lot of money. They don't want to squeeze the stock. So they're slowly buying stocks here and there wherever they can and recover a little bit. It's going to be a long way before they recover. And because a lot of the public has a huge amount of holdings, then the stock will start going up eventually. And what these hedge funds, again, like they're doing, like I said, they're paying a bunch of interest. And instead of them squeezing the stock, they would rather kind of suck it up and not let the public win and show that the public is winning, and they'll pay that huge interest. So at the end, no matter what, we are winning in that aspect. These stocks might not squeeze. We don't know yet. They'll eventually, I feel like it would have one strong squeeze because, again, like I said, the public is owning a huge amount of the shares and people are holding. And the reason these stocks aren't shooting up and squeezing like crazy at the moment is because the stocks aren't being traded as much. As you see, like here, GameStop's average volume was, when the stock was trending, it was at about 100 million. Right now, it's at 14 million. So it's showing you that this stock isn't being traded. So if this stock was being traded a lot more, then the stock will go up. But because people are holding, the stock isn't moving in price. It's keeping at this level. And that's what the hedge funds are trying to do right now. They're trying to wait people out so they can get bored. They could sell and thinking that this is all over. So when the stock drops, they can recover a lot of that back. As you see, the same thing with AMC, the volumes are low. Compared to the billions of shares they have, this is low volume. And this stock is being traded a bit more than GameStop because the price is a lot cheaper. But this one also has potential to squeeze. But if it doesn't, it'll still eventually grow once it receives great news that it might be acquired by one of the big corporations. We still don't know which one which could be Netflix, Amazon, or, another one. We just don't know. But it's a possibility, so stay tuned for that. So one thing I want to show you guys is still how people are getting manipulated. You can see here at Churchill. This stock shot up like crazy, and I know a lot of people are following it. But the news of the merger is still not fully there. So why is the stock shooting up like crazy? Again, hedge funds are manipulating this like crazy as well. So don't fall for the I want to say chase, because people are chasing the stock and people lose money. So as you see today, the volume here was low. As you see, compared to the stocks that traded today, the volume was at 68 million. As you see here, this shot up between here. You could see the amount of millions of shares that was being traded. It wasn't a lot. It was pretty low. So this fluctuation that happened because someone put the price higher and they sold at that price. And that's the same thing that they've been doing with GameStop and AMC. They place a price at a certain price and they trade with themselves, and like that they can make a profit. So if this stock goes up on Monday, then we're going to get the repetition of how it happened last time. When was it? It was about a month ago. I don't know what day. It shot up, 38, and then it dropped down and it went back to like 29, and then it jumped back up. And as you see today, it jumped back up and then it dropped back down slowly. So these hedge funds are manipulating these stocks as well to actually make some profit. I'm not saying Churchill Capital is a risk or any of that stuff. It is a risk, but this stock does have more potential than NEO, in my opinion. So have that in mind. If this does merge with Lucid Motors, I think NEO stock will jump down just because of that reason. Now, Lucid Motors will be more effective than NEO. So I do see the potential in Churchill Capital once it becomes Lucid Motors. And yeah, I mean, that's just something I wanted to show you here real quick. But GME and AMC, the squeeze is still possible. The amount of shares that are being owned by the public, like I said, gives it really high hopes of it squeezing. It'll squeeze sometime or another. We don't know how much it's going to squeeze, but it probably will squeeze a bit because the demand is going to be there, and eventually someone is going to have to pay that price, which is going to be the hedge funds. Because like I said, right now they're still losing because they're paying interest on the stocks that they borrowed, that they shorted. So, like I said, they would rather pay interest than let the public win. So, like I said, they're going to recover whatever they can, but at the end, they'll still have to find a good, price to jump in and squeeze it up because that's the only option they have. And like I said, if you hold, it's a risk, like I always say, but if you already accepted your losses and you just want to mess with the hedge funds, or this stock can actually have potential to shoot up, then you wait it out and go for it. But again, this is not financial advice. Like I say, if you guys need the money, then you guys should jump out and accept your losses. If you already did, it's tax deductible. But if not, then, do your thing. Like I always said, don't think that, you guys are going to just make quick money here. In the stock market, you have to have patience. And that's what I say, like the stocks I recommended yesterday, EXPC, ACIC, and APXT. These are stocks that I just buy at a low price, wait a couple of months, and then I make my profits. I have my long-term stocks, which is Chevron, Apple, Realty Income, Coca-Cola, and AT&T. So, I'm well diversified, and, that's why I kind of have the ability to jump into stocks like this because, and take the risk because I'm well diversified where I can, lose money somewhere and make money somewhere. So that's pretty much it, guys. If you guys like the video, please like, share, and subscribe. Once we hit 5,000 subscribers, I'm also going to be doing an Apple stock giveaway. And yes, they come in a matter of gift cards. So, that's how you can redeem it. If you guys didn't know, you can do that. So again, Acorns next weekend. If you sign up, just let me know, and I will be giving a stock that is Procter & Gamble. That stock is worth about $100. I don't know. Apple's worth about $130. So, just for you guys to have that in mind, it'll be worth it. So that's it. See you guys next time. Thanks for watching, and I really appreciate it. So bye.